of people are talking about, but one guy who is Michael Lee Strategy founder Michael Lee. He joins us now. Good to see you, sir. All right, I want to just delve into something I saw in one of your notes. You're a guy who's pretty bearish on the real economy, but you're bullish on where stocks are headed, at least in the short term. Okay, so those two things can't coexist forever. Which wins next year, Michael?
Well, it's going to be interesting to play out. I think the likely scenario is that we continue this bull run for the first quarter, maybe a little bit longer, and then we're range bound until the election. And just because the economy is looking really ugly, particularly for the bottom end of consumers, doesn't necessarily mean the bottom will completely fall out of stocks. What you can see is the stock market running ahead, and then a little bit of a catch-up game with the economy, because the market tends to move far in advance of the overall economy, and we got this Fed pivot. But what really scares me is there's no such thing as a soft landing. So if we have one here, this will literally be the first time we've ever had this type of vicious rate hiking cycle, these types of slowdown in manufacturing, credit contraction, money supply contraction, where there is no recession.
Mike, it's interesting because I always compare Jerome Powell to a gymnast. He's got to really stick it perfectly like Simone Biles does it in order to get the soft landing. And that's just not that easy to do, especially with somebody like Jerome Powell, who has made some mistakes before, or at least televised mistaken commentary out into the marketplace. We never really know exactly what's happening in someone's head or why they say certain things, but that is a separate conversation. So you say you're short-term bullish, medium-term scared because of some of the risks out there. Can you dig under the hood for me a little?
Yeah, so you start looking at things like Google searches for, can I give my car back? Right. They are at an all-time high. This is, of course, people who can't afford to hold on their cars. You look at credit card debt delinquency rate across all banks, it's shaped like a hockey stick way up and to the right. Okay. You look at delinquency rates at banks outside the top 100, they're at the highest level, highest rate ever. Okay, on top of that, you look at the soft data, and so we have a real big difference between consumer sentiment and consumer spending. Consumer sentiment and a lot of the survey data, especially in the ISMs, are not only ugly for the consumer, they're ugly for manufacturing, and the leading economic indicators have basically been in contraction for 18 straight months. And so at some point, the rubber needs to hit the road here, and why we're not having these quarters of contracting GDP for an official recession is because of excess government spending, which is the double-edged sword here. So tax revenue is falling off a cliff. We were supposed to come in at $5 trillion in revenue last year. We came in at $4.5 trillion. I don't think we're going to be higher next year. So after that, what is the deficit going to look like next year? What's that going to do to inflation? And how realistic are these rate cuts if the economy keeps chugging along?
Right. I mean, rate cuts are supposed to happen when there is a slowdown in the economy, which would, typically signal that things are not good. And I think something that we talk about on this show a lot is Wall Street versus Main Street. And we got to talk to some of those Main Street business owners, specifically in battleground states, and they had a lot to say about what the economy actually feels like for them and their businesses. Take a listen.
The price of food has gone up. I don't have to tell anybody that. But when's the last time Biden or any of his pals went out to the grocery store, bought food for themselves and their family, and been like, man, this is really high?
Right after Joe Biden took office, everything doubled in price.
Okay, so Wall Street having a party at the end of the year, Main Street not feeling that so much. Are things going to get better for those everyday Americans in 2024, or are you concerned in that area?
No, look, I think that's why you're seeing the polls the way we're seeing, is because absolutely not. There is no real catalyst for the economy to improve other than bloated government programs that are going to slow productivity, increase inflation, and kind of like it's a war on the private sector. So the larger piece of the GDP pie government becomes, the harder the private sector has to work to pull the horse along. So if you have 20% government, 80% private sector, if the private sector grows at 5%, that's a 4% overall GDP growth. If the government is half of the economy and that same private sector only grows at 5%, that's only 2.5% GDP growth. So what we have is the crowding out of the private sector throughout this entire administration.
Yes.
And it's only going to get worse next year. And that spending may paper over the fact that we might not have these 2 consecutive quarters of declining GDP. But for middle America, this has been a devastating few years. And next year, in my opinion, will most likely be worse.
Michael, great points. You got to lead with private sector, not the government, sir. We got to leave it there. Good to see you, Michael Lee.
Thank you.